Good morning, everybody. How's everyone doing today? Hope you guys can hear me. Everything should be running the way it should, hopefully. All right. Thank you so much for that, Johnny. Appreciate it. All right. Market's just opening. You got a short on the YM Dowie Mini right there. If it comes down, make a little adjustment. Get short at, well, it went too fast. It's going to say 35,732, but it just blasted right through. It could come up and fill you still, but you could see that that one was not, unless you had your trade in earlier. Anyone get that trade in? I don't know if that's my internet connection or did you guys see it go that fast? It did just hit the money management level, I think. 701. No, it got to 702. Looks like it's gonna, well, I don't know. Anyone got into that trade, let me know. It looks like it's coming back up, given a second chance to get in. Now a possible stop and reverse, and it is 736. Long at 736. Yeah, it's moving really quick and maybe too fast. Pretty fast market. So you can see what happened. It just missed its money management on the short side by one tick, and there it is hitting it on the long side. I don't know if anyone's trading this or what, but trade plan we typically follow. And that second trade there worked out really nice, but that was also really, really fast. Like 5 seconds. I don't know how anyone could have executed on this. Just let me know if you did. I don't think any of you did. I know I wasn't able to. All right, let's just see what happened this morning at our 9 a.m. crude oil start time. Definitely it's a beauty right there. Getting short at maybe a tick lower than that yellow line, 26 perhaps, but the entry there says 27. We always adjust a little bit around key levels, but you could see getting through all four targets and crude oil finishing with a one and done session this morning. Really great start. And good morning again, everybody. Good morning, Mark, Craig, Miles, John again, another John, Roger, Pamela. Great to see you guys. Unleaded gas. Also, great start right there at 9 a.m. Pushing through. Perfect target for. Unleaded gas finishing with one and done today as well. The energies continue to be performing excellent. Let's quickly review what else is going on. Another short on the YM, by the way, that one triggering in 75, 784 or 783 even, but regardless, getting short. plenty of chances to get in on that. If anyone got short, you're looking to get to 743 for break even at least. And there it is. So if you got short, the other two trades happening way too fast. But this one hitting another target, good for 46 points. So the YM definitely got some nice swings happening here. It's just markets have been really crazy lately, as I'm sure you're all aware of, especially if you've been trading. The NQ, the Russell, they've all just been really, really quick. Anyone in that YM trade? The stop is at 766 now. Don't forget that tomorrow is your last day to trade the December contracts for the E-minis. By Friday, you're going to want to make sure you're on the new contract, the March 2022 contract. So in the case of the YM, it would be YMH22 would be the symbol, YMH22, H being the symbol for March. So don't forget to change your charts after tomorrow, in time for Friday's session. And the stop pushing down on the YM. And missing its target 2 by 1 tick. And the stop has just moved down now to 748. Maybe keep it at 751 if you're in that. And it did just hit. Actually, the stop moved even lower to 741. And it did hit 741. You could put your stop at 742 if you're still in it. See if you could remain in that trade there. Got to be really quick now with some of these early setups. And it did stop out and finish. Just a quick look at our counterpunch soybeans chart. 8:30 start time. There's 8:31 getting long. And that trade's still going. It actually just hit target 1 just now. So soybeans with counterpunch again will be 1 and done today. That's good for 2 3/4 points. $50 a point like the ES. And stop should be moved to break even if anyone is in that. I don't know if any of you are, but that is a nice plan that's been working for many years. We got the crude oil inventory report coming up in about 40 minutes or so. We'll definitely do that. The NQ with Catapult, looking at the NQ with the custom Renko chart that we've been talking about for a while. And with setups like this, you can see why we're interested. Definitely, you can see why the Catapult gets his name. Some of these trades look like they've been flung from a catapult. Now, I always say with this, it's best to wait 4 minutes. Clearly this morning, some nice moves prior to that, waiting 4 minutes. There are a couple different ways to handle this, but this would have been the first trade. And there's some things you could do with the calculator that I could show you, some tricks. And then you got stop and reversal issues and what kind of adjustments should you make. So those considerations are important too. If you're short, when do you flip to long? You want to put some sort of an adjustment to give yourself a little extra because you really want to protect your position and stay short if you can. But even if you flip over to short, well, you could see the money management rule came down and it would have been a break-even trade right here. And then getting long, that one would have lost. And then on your third trade, that would have been the one to finish. And if you look at the time at the bottom, you're, literally 2 to 3 minutes. You're done with this chart. I'm not going to call it a trade plan because it's not really a trade plan yet. It's just kind of an exploratory chart at this point. But when you see moves like this, well, I'll let you fill in the adjectives. Yeah, JDS with a really good question. If the markets are in whipsaw, would it be good to go to higher time frame? Yeah, that's just, those are trade plan considerations. And unless you can prove something, I have a hard time with that. There are people who are instinctive traders that know how to just look at a chart and instinctively know when and how to trade. And I don't know if that's you, JDS. So I'm always reticent to tell somebody what to do and what not to do because I don't know the person I'm talking to really. And I don't want to talk you out of something that could work for you. But I'm also a big believer in proving to yourself a method. And when you start flipping over to higher time frame charts, how do you prove that over a lot of trades that it's actually a good idea? I don't know. I don't know the answer to that. I'm a bigger believer in having a trade plan that you can prove and then getting really good at executing it. And then you can get measurable results that show you if you execute the plan over a lot of trades, you're going to make money. I just think that in the long run, you're more successful like that. But I'm saying, when I say you're more successful, that's a general statement for everybody, and every individual is different. So therein lies the issue. I don't know. I don't know the answer. I mean, I'm looking at these charts right here and not really seeing a need for a higher time frame. And if you were to use a higher time frame, can you prove it's going to succeed? Or is it just, again, are you just shooting from the hip? Like, I don't know. It's hard to, it's almost like John Wayne trading, shoot from the hip. Seems right. Maybe you'll hit your target sometimes. I don't know. Hopefully that answer makes sense to you. So I kind of let the cat out of the bag the other day that I'm working on a new catapult trader boot camp and module for the Russell E-mini. And it's showing some really great signs of, let's just say I'm excited about it, especially with the micro Russell now trading with volume. Wasn't really, the volume just wasn't quite there when it first came out. It was lagging the other micros, but now you can see the volumes happening. It's almost up to 70,000 contracts already in the first 14 minutes. You can work with that. So I've got several experimental plans. Nothing, ready for prime time yet, but one of the things I'm discovering is there are some nice time zones like prior to the market opening that are looking really good. Some of you I know are always looking for that extra little thing you can add to your trade plan routine. If you could start a little earlier, some of you want to trade a little later. It depends on where you are in the world. So I've got this interesting plan I'm working on with the Russell, and I've been basically working with the micro charts because I just think that that's just more interesting for a lot of people. You can do so much with it as far as scaling out at different targets. And this particular one has got a 1.98 profit factor, almost 2.0 profit factor, and it starts at 8 a.m., 30 minutes early. That's kind of exciting. Winning about 72.5% of its trades, so that's pretty good. And it just made new equity highs today. So, I'm pretty simple. I don't try to if something works, I just kind of stay with it. Let me see if I can show this to you. NYM. Let's see. Again, it's very experimental. So basically, I took the NQ chart and I was working with the one that I just showed you on the micro NQ with the custom Renko and tried to set up a similar chart on the micro Russell. Hey, Tony. Good question. Are we watching Spotlight or Counterpunch? A little bit of both. We got our main Spotlight trade plans that always, kind of the mainstay signature charts in this trade room: crude oil, unleaded gas, Dowie Mini. Crude oil and unleaded were one and done, and the Dowie Mini was really fast, but several winners. Hopefully enough winners, but I don't know if anyone's even trading it. And then with Counterpunch, we looked at soybeans. That was one and done. And we'll definitely look at crude oil for the crude oil report. Any questions anyone has, I'm happy to look at charts. And now this is Catapult Trader, and the new Russell E-mini module that I'm working on. So here's something I'm experimenting with starting a half hour early. But ironically, this morning, the setup was at 8:30 when the market opened, but the plan actually starts at 8 a.m., but there was no setup at 8 a.m. today, so it's going to just go with the first one. There was one at 7:46. There was this green trade here at 8:26. That would have counted. It just never triggered in. Canceled. Instead, the short came in. And it got to target 2. And target 2 is good for 6.5 points. Risking 4.5 points to make 6.2. It's a nice R to R there. Everything from target 2 and above is better than a 1-to-1 risk-reward ratio. So sometimes you get target 1. It's almost 0.8 to 1. I still don't think that's the place to take profit, but you can. It hits it a lot. But I like the bigger targets, and target 2, you can see, finishes that. This is a one and done plan. Well, let's see, is it one and done? Not exactly one and done. It's it's power of quitting with one winner and a positive result, and then you're done, but you're able to take up to 3 trades to try to get to that positive result. So in this case, it was the first trade that did the job. So there are different power of quitting formulas, and I like to test different options as far as maximum trades, total number of losses, how many winners do you need, and then have a positive result. So this one was 1 winner and a positive result, but up to 3 trades total to try to get there. And that's probably because of the explosive nature of these trades. You can get a small loss or 2 and then a big winner. And you can see that happens a lot. Like look at what just happened here. So this, I'm not saying this plan only works early, but you have to be prepared for a couple small losses that will happen during some consolidation with a chart like this. But then the explosive moves that follow are very common, as you can see. And again, this is still an experimental plan. But early this coming week, I'll start having more details about the upcoming Catapult Russell E-mini. There's been a lot of requests for it over the months. Just looking at the regular Russell E-mini with Spotlight and the 1.5 point momentum bar, which I'm not convinced is the right bar for this. You can see the first trade of the day getting long here, and then that flipping over to short, and in a two trade sequence, power of quitting results. And then another trade here, the green trade. Green trades do this a lot where, they make you chew on your nails a little bit. This one coming down to test the swing low, stop holding, and then flipping around and zooming. And the green trade often looks like this, just the nature of that trade. So one way to do it, of course, is when you're trending down and you see a setup, you can ask for additional confirmation. This is actually a really nice way, I think, to trade these reversals. Certainly would have helped stay out of the blue trade here using the same idea, but instead of taking the trade right away, give it a chance to come down and test the swing low first. And then if it comes up again, then take the trade. So you get in here. And sometimes you'll miss a winner because there are V-shaped reversals, and those are the ones you're going to miss. But if you use that same theory or that same approach, then chances are you're avoiding this trade. So it comes down to test the lows. Now maybe right here it comes up again, and maybe you're going to get in. And I wouldn't blame you because it kind of does come down to try to test the lows, and it can't really get much lower. Of course, it's not done testing. You could always put your entry slightly above, or at least make it touch that level first and then maybe fill you. I don't know. I mean, there's different ways to handle the test, but sometimes you can't avoid it. And it does kind of come down. It doesn't get as low. It then pushes higher. And so I do think adjusting around the blue line is a good idea. If you don't want to go quite as high as that orange line, you could put your entry above the blue line. So the blue line is at 2254.65, call it 0.7. So put your entry at 0.8, for example, right above the blue line. It comes up and it hits 0.6. It doesn't hit 0.8. And you still stay out of the trade, you see? So you use the clues on your chart and let price action prove to you, or at least offer more evidence that it wants to move in your direction or not. And that's why I have the blue line on here, because it's a really great pullback line. And we know it's a pullback line. So put your entry on the other side of it. And you can see it did pull back to that line and then went lower. We know that. So it's a good tool for you to make little adjustments to try to avoid some trades that might wiggle you in, because the way Spotlight works is the market's overbought. I mean oversold, I should say. You can see with the blue lines poking up. And then you get your exhaustion levels that give you the setup. But just because a market's oversold doesn't mean it's finished trending lower. And we know the fourth reversal is usually the one that does it for us. And so when you trace back to when the trend begins and count your, I guess that's kind of hard to say. I would always go where the highest point is and count your reversals. By the time you get to your fourth one, does this one count? It's hard to know where to start counting sometimes, but clearly that's not the fourth one. So the odds are better as you get deeper into the lower trend. Wherever you start counting, but all of a sudden you can certainly see 2, 3. Does this one count as 4? I don't know. And then it wins. So we kind of know that. And if we use the blue line, that could help us stay out of some trades and not getting in immediately, but making it test the swing low and then coming up could save you sometimes. But this chart looks pretty good today. The Russell's moving a lot. Retraces are a bear, JDS says. Well, it's also an opportunity. It's just really a matter of learning how to use it, learning, they exist, and whether you like it or not doesn't matter. So if you can't beat them, join them. It's about just learning how to dance with the market and let the market lead. But we could take the pullbacks and come up with really high percentage approaches to help our trading. So a momentum bar that's 1.5 points, Donald, is 15 ticks. I'm not sure that's the right chart, though. And looking at the custom Renko looks more exciting to me. And there are some custom Renko choices for NinjaTrader. John, I don't know if you got any closer to making a decision on what you felt might be the best one to use or not, but if you have any insight on that, please do share. I've got several people asking me. I'm not sure how to answer them. I'm sorry, I was just showing you a Renko chart on a monitor that you're not even looking at. Duh. Hold on a second. Let's go back to that Russell. We just saw that momentum bar on the full Russell. Here's the Russell micro. And we were just looking at this a moment ago. We were looking at, I said you got to maybe take a couple small losses from time to time, but then you get the explosive moves. One, even the short was really good, and then another amazing long trade, and now another amazing short trade. This is the kind of day that maybe you do want to trade like John Wayne. Give yourself a 3 or 4 trade limit to get positive, and chances are you're going to knock the ball out of the park. It's that kind of session. It's how it's been. And we're in December leading up to the holidays, and these are often this is often the best month of the year for day trading. Whenever I've gone back and looked at the results of many of my trade plans over the years, the December trading really boosts those results a lot, and we're seeing why. This is a day trading paradise, really, the way the markets have been behaving. But it's also dangerous because they're fat. The markets are often really fast and hard to execute. So at least you can use this price action to practice your trade executions. Open up sim trading. Don't worry about winning and losing. Worry instead about executing flawlessly. Learn how to place trades. Learn how to cancel trades. Learn how to place stop and reversals. Learn how to cancel stop and reversals. get used to your motions with OCOs. So I've often shown you how, and you can see this on my YouTube channel, on this channel here, there's a video on how I like to use the matrices, where I have my stop limit order matrix for entering trades, my market limit order matrix for stop and reversals that I could just click on. You could set up domes in NinjaTrader or active trader windows in Thinkorswim to do the same idea with templates, so that you place your stop limit order to avoid paying commission getting in. You use your market orders for stop and reversals. You'll have to pay whatever slippage there is. There's no way to avoid it, but you only use those when you're doing stop and reversals and you got your templates already in place. And then a third matrix or dome or active trader window that's for single market orders that you can flip to any time in case you need to scale out or you lose a handle on one of your OCOs, one of either your stop or your target somehow gets deleted or disappears, whatever. Use a single market order matrix or whatever to manage the trade. Just be sure that you're paying attention to how many open orders there are. When you go flat, you don't have any stray orders hanging out there that you got to make sure you just cancel them when you're done. But that's a good thing to practice. You can practice that on a day like today. I mean, spend a week practicing it until you can just do it like riding a bike without having to think. That's how fluid you want your trading to be. So set set everything up so it's really efficient. You don't have to move your mouse much. Everything's right in front of you. And you can handle all kinds of trade executions with your preferred chart and market. Yeah, John, it's near the beginning. It's one of the older videos. I'm sure I could pull it up and find it. It's kind of a pain to get past all the live session videos. Let's see, I guess you can sort it. Okay, so sort by date added, put the oldest ones on top. And the third one, trading tricks, how I place trades. Yeah, I can't believe it's been 3 years since I did that video, but nothing's really changed. Let me I'll get the link for you in case you didn't find it yet. There you go. Put it in the chat. There's probably some others in there too that you can find. There's some live trades that I've done where I show you some live trades that use the same technique. But that one there kind of talks about a good way to set up your order entry, at least with TradeStation 9.5. Now, I know there's far more sophisticated tools that you can use. And with TradeStation 10, you could set up maybe some better templates, especially with stop limit orders. I think you could do stop limit orders directly on the chart with chart trading instead of market orders. Getting in with the stop limit order is going to save you a bunch over time. It'll save you a lot in slippage. But when you got to do a stop and reversal, if you try to reverse using stop limit orders, the odds are is you'll get stopped out of your trade. You'll pay the slippage on the exit because you got to get out on market orders with your exits in case you don't get filled, right, with a limit order, stop limit order. And if you use a stop limit order for your reversing trade, there's a chance you don't get filled on the reversing trade either. So you really want to just kind of hold your nose and flip your position with stop market orders. Definitely costs money because of the slippage. Yeah, you want to know how to do that, John. I mean, ultimately, you want to have your template in place where you have your handles. Every trade you place is OCO. Starts out as an OSO, right? Order sends order. So that when the entry gets triggered, it sends your handles. It sends your targets and stop, all connected with OCO. So then when one gets hit, the other gets canceled. And that's the only way to trade. And you really want to make sure you know how to do it and that you're good at it. But one thing that's really difficult is you don't want to have to turn your OSO and your OCOs on and off. That leads to much bigger mistakes. So you want to leave them. That's why I have the extra matrix with a single market order that's handy, that I can grab it when I need to. So watch that video there and it'll be more clear. But other people that I've mentored in the past, I've had them practice that over and over again, and it really helped to the point where they were just excellent and really fluid with their order entry. I mean, so much is at stake when you're placing a trade, right? That you want to make sure that you can place your trade and be really good at it. I mean, that's your point of contact with the market. That's where you're actually stepping onto the battlefield where the bullets are flying. You need to be excellent. And if you're not, well, why? You could practice until your heart's content for free. So do it. Yeah, chart trading's okay too. I mean, you could do that, but I'm more nimble for me. And maybe because it's 9.5, chart trading is harder to be precise for me. I don't know. I haven't really worked on it that much, Donald. And also with 9.5, they're all market orders. There's no stop limit order with the chart trading. So I just find the matrix works best for me. But each to his own. Yeah, the extra you get your matrix set up, and you don't need to have a lot of matrices. The matrix will use up a lot of your bandwidth. TradeStation being, who knows why, a 32-bit program still. Welcome to the 19th century. So you could have a radar screen. Is it radar or is it a scanner? I don't know. I have a list of symbols that's all connected to my three matrices. So if I click on a symbol, it automatically pulls up the data on all three matrices. So you don't have to have a lot of matrices for each symbol. You just have your list there that you can click on, and then it toggles everything over for you. Yeah, and TradeStation 10 does too, Don. If you could do chart trading and you could, you figure out how to do that, then great. Ultimately, you can have both going at the same time because it should be connected. So if you place a trade chart trading, then your matrix should be active, and vice versa. If you place it on the matrix, it should show on your charts too, and you can have the best of both worlds. I mean, it doesn't matter to me. What matters is that whatever you do, it's right in front of you, it's efficient, it's minimal mouse movement, and you're really good at executing. The most important thing is being really good at executing. That's the most important thing. All right, so look, the crude oil report's coming up in about 20 minutes. So I don't have much more time in this session. We're going to kick everyone out. I'm going to open up the new session for the crude oil report. We have a little bit of time. Pamela, I know you have questions about these Renko charts using Counterpunch or Spotlight. And I'm not sure we're going to have a ton of time to get into it. But what I did here, and by the way, you're a VIP member, so you have access to Catapult. You could put your chart together much like I have mine. But ultimately, most of the time you see the exhaustion dots. This isn't 100% all the time, but much of the time, the way this is set up is that the exhaustion dots tend to occur when the catapult setup occurs. And on your third dot, often, most of the time, again, not all the time, but most of the time, lines up with the catapult trade. So the difference is the targeting and the stop. And you can see I've got my stops a little bit bigger. It's not just one tick beyond the bar. It's several ticks beyond the bar for catapult. For Counterpunch or Spotlight, the stop would be all the way up there at the exhaustion dots. And as a result, you're going to want bigger targets also. So you could put on the default Counterpunch or Spotlight and see which one you like more. But you could also just draw the trade, because that's the exact targeting of Counterpunch or Spotlight. You can learn how to draw that right on your chart. And the targeting is not the same as Catapult, because Catapult uses a different measurement system for creating these targets. But you could see the accuracy of the targets. Look at Counterpunch target 4, right on the nail. So you could learn how to just do that. You can just draw it, or you could put on the default settings. Target 2. There's something about the Counterpunch and Spotlight targeting that's just uncanny. And it's because of the algorithm that it uses for calculating. It just happens in nature. It's just one of those weird things at price action, these patterns, they occur. It's not like I invented it. It's more like I discovered it. I can't take credit because it was happening before I discovered it. But if you think about it, we've seen this over and over again. Target 2 right there, just missed by a hair. So Pamela, if you're listening, I would suggest, the other thing is when I put Catapult and Counterpunch on this particular chart, I have the Catapult targeting, not the Counterpunch targeting. I'm showing Catapult, but I'm also showing the Counterpunch exhaustion dots. And you could easily do that. Just put your Counterpunch calculator on the chart and turn off all three setups, the white, green, and purple setups. Just turn them off. And then you'll turn on the dots. Turn on your dots. So in this case, you could do it with Counterpunch Express or Counterpunch Trader or Spotlight. But with Counterpunch, for example, use the Counterpunch trade, set to false, use the failed levels, that's the green trade, set to false, use the seconds, that's your second level purple trades, set to false, and then show the setup dots. They're called exhaustion dots, and in this case they're called setup dots, and that's set to true. So the only thing this is showing is your exhaustion dots and nothing else. And that's a nice little tool to have. You can save that as a template. Yeah, so when testing a new market, great question by Brandon about when to use key level adjustments. So there's different kinds of key level adjustments. There's those that adjust around numbers, right? 10s, 25s, maybe some 5s even if you're in crude oil, for example. But then there's also the adjusting around what you see on the chart. strategic lines like the 20 SMA we were talking about earlier, or swing levels, pivot points, whatever you want to call them. So the general rule for me is, well, when you're testing, if you're referring to manual testing with your UTA spreadsheet, then I think you do want to use the adjustments, how you would trade it for real, around 10s and 25s. And, the numbers you do want to adjust around. If you get within one tick in front of a key level, adjust it one tick beyond. We're not talking about Fibonacci, no. We're talking about key level adjustments. There's key level adjustment training on all my strategies, so I would definitely review those. If you're talking about automated, well, you can set that up too, but it's really difficult because contracts expire and you'd have to use continuous contracts, and then those all back adjust to smooth out the spaces between contracts on the charts, and you end up with price patterns that occur. They actually happened, but they're going to be at price levels that never happened because of the back adjusting. And so you have to turn your key levels off if you're using continuous charts to automatically, to run tests with automation. But if you're back testing with the actual contract that really happened that you would trade with, then I think you want to have your key levels on. Now, with the quarter point tick charts like NQ and ES and grain, soybeans, whatever, I don't turn on key level adjustments. I might make one manually if it, I have a rule. If you could see it on the chart, an obvious place, you don't want to get long one tick or two ticks below major resistance, for example. You just adjust one or two ticks beyond it. So I think it's a matter of common sense. You don't want to over adjust. You don't want to. Here's a like a heat check where you can check yourself to see how you feel about your strategy, your chart, your trade plan, etc. Is when you're making adjustments, are you afraid of the trade? You don't want to adjust out of fear. You don't want to over adjust. You don't want to destroy your risk reward ratios and your money management plan and all that, because adjusting changes all that sometimes and will mess you up. So you really just want to make small adjustments to try to avoid some market noise, some false breakouts. Don't try to avoid all of them. That's impossible anyway. You're only trying to improve your trading on the margins just by a little bit. So for the big overall advice on key level adjustments, I always say there's a 5% art to trading, and you want to reduce that 5% to a mechanical rule set that, even though it's not written into the code, you're following it. So one or two ticks okay, three ticks sometimes, four ticks rarely. For example, that might be on a fast day trade chart. Maybe it's a bit more on a bigger chart with bigger targets, but you don't want to adjust yourself out of the trade too much because you're afraid of the setup. So you just use it to monitor yourself. Small adjustments, because let's face it, key levels are broken all the time. Swing levels, chart levels, they're broken all the time. So don't be afraid of them. You're just trying to clean up some trades, and that's it. So I hope that helps, Brandon. I know I got videos on it all over the place, but I couldn't tell you where they were. But I do know there's a key level adjustment training on just about every strategy I've done. So review them. And then any questions you have, like specific examples that maybe you're stuck on, I'm happy to pull up a chart and look at it and talk you through it. And it's definitely something that you improve with over time as well. Like, you don't have to have your key level adjustment rule set or the things that you do totally figured out. right away. It does take some time and experience, and a lot depends on the market and the chart also. So just all those things, yeah. Just remember, you want to be a 5% or less artist in trading and 95% or more mechanical with rules that you can test and prove. So JDS, back to your going to a bigger chart idea. Think about that in relationship to what I just said just now. Ultimately, if you can be an artist with 1 to 2% decision making and 98% mechanical, you're going to be better off because you'll be able to test and prove that you can make money. You see? But what most people tend to do is like they have a blurry line, and instead of being 5% less or less of an artist, they're 10, 20, 30% shooting from the hip, and now they're John Wayne trading and no way to prove that their method is going to make them money over time because you can't get the sample set to prove it. So JDS, just think about that. If you don't have a way to go to a higher time frame, that's a problem. If you do have a way, something that tells you when this happens, go to a higher time frame. Great. Now you have a rule. You could do it the same way each and every time. But don't do it until you could prove it to yourself first. And what's it take to prove it to yourself? Not 1 or 2 sessions, not 5 sessions. You need between 75 to 125 samples to start getting statistics that you can depend on, that they'll start to stabilize and really reveal answers to you. You see? So how do you go to a higher time frame chart and get that kind of a sample set with a set of rules? I'm not saying you can't do it, but that's a real important question that you have to answer. All right, so I hope that helps you guys. That's about all I got right now because in 8 minutes the new session starts. So I'm going to close this up. I'll open the new session shortly. Please don't forget to hit the like button for me. Really appreciate it if you would. And I'll see you guys back here in a few minutes.